Welcome to the StockMiner.com studios here in the Black Hills of South Dakota. I'm your stock miner Brian Johnson, making professional trading simple. Welcome to the weekend video. Before we enter a new week, let's talk a little bit about what happened last week. Very interesting things, actually. And we had some good action, both up and down, all of last week, ending down. I would have suspected that for the month we would have maybe held upwards a little bit. We did finish down. It wasn't a major move, actually, in the bigger picture when you're looking at it from a weekly or whatever type of move, but down was the direction regardless. So what we're watching this week is, are things truly broken on the bull side? That's been the question all along. And I pondered that this weekend, and after looking at the charts, the real answer is no. Nothing's broken from the bull side yet. Bears once again have a great start on things, but we've seen this great start on things a couple times in the past, but it's never held, and we've never got confirmation. So this week is all about, once again, confirmation. So here you can see on the Dow 60-minute, we are right back to that 11,000 area. Now, I'm still waiting for that bigger break below 10,950. That's going to be, I think, a big mark in the sand. And ultimately, if we head back up, we want to watch that overhead trend line that I have drawn in there. That is going to be your first place to be watching. Any break up and over that, just once again, means the bulls are winning, and there's probably going to be more buying coming into this thing. If we just hop ahead here to a daily and look at what we're seeing here, this is more of this chop action coming. Could get pretty bearish early in the week if we get moves to the downside early in the week. Otherwise, if it does what it did here, big red candle, then we had a couple of up days, we're just ate away at it again. If this big red candle turns into another white day tomorrow, and even maybe 1, 2 white days into Monday, Tuesday, we're going to end up in this little consolidation move to the side, and that has always ended up being bullish. So we're watching these lower levels down here. Those have to be broken before we start to get more bearish on this market. So we're watching for breaks below 10,950. That would be, I think, a good entry to the short side for the Dow. NASDAQ looks the exact same way. We're right back to the 2,000 area. Really want to break below 2,000 and ultimately 1990. That'd be a very good start for the NASDAQ if you're looking to go short this week. So a lot of these charts all looking the same. Look at this. Once again, you can find this on the Dow too. A little shoulder, a little head, a little shoulder. Oh, yeah, but once again, not a lot of these have worked out. Now, sooner or later, sure, one might be tomorrow. It might be tomorrow. Then we'll be looking at possible targets down here in the 10,800 area or so on the Dow. But until this area breaks, once again, we have to remain neutral to bullish. Okay, so here's a NASDAQ 60-minute. Here's a NASDAQ daily. It looks the same way. See it? Breaking through the blue, giving us a shoulder, head, shoulder, breaking below 2,000, ultimately 1990, I think is a great start for the bears. That's what we're watching for. All right? Pay close attention to that early next week, especially if we start to move up. Let's see if we close back above the 20-day moving average at 2013. That should act as overhead resistance. I'm going to give it a day, even two actually in this case, for the bulls to take a shot at getting it back up and over all of this area. Why? Yes, it's a head and shoulders. It's beautiful. Top of a move. It's perfect scenario. Can it play out? Absolutely it can. But sometimes when these things look a little bit too pretty, a little bit too perfect, I get a little bit on edge. I don't trust perfect and pretty all the time. So moving ahead, if we look at the weekly, same. We had a move back down last week. Actual red candle after what? Count the days up. This goes back to like the end of January since we've had an actual red candle, a red. A real red candle on the weekly charts. So we want confirmation of this next week. That, I think, all starts with that break below the 1990. I think it takes us back into this lower level right here. We get a break next week. I think we get at least a pull back to that level. That'll be about 1950, 1960. SPX looking the same way. Got this overhead resistance level we're watching. Still waiting for breaks down in this area here before we go short. But you'll notice that all of these charts are starting to look exactly the same way. I don't have this one drawn in. The only thing that differs is the SPX from the standpoint of is I can't draw a line straight across here and get that same head and shoulders type of a look. I get a little bit more slanted head and shoulders, but guess what? Still a head and shoulders. And I'm, guess what? Still waiting for a break below this area, which is right about where we've been talking. So just be very cautious in your trading. It might take a couple of times too before we finally break down, so be cautious of that. But these are ultimately the larger lines I've been looking at for now. I don't know how long, how many days, how many weeks, at least a week or so back probably. But they all stand just as they did this last week. The NASDAQ coming back to revisit its blue line potentially on the weekly. SPX already there. So getting breaks down below those areas I was talking about, also very bearish from a weekly standpoint if it can close below here. And then what are we going to see? Well, we could see a complete crash to the downside, or you know how I love and how I expect to see these things break, pause, turn around, come back up, retest the underside of it, and then roll over. That's a very possible scenario too. So think about it in one of those two ways. Take your entry as you will. Sometimes some people are more aggressive, some people aren't. VIX on a daily, big moves up, big moves down, big moves up. There's a lot of volatility happening in here. Watch this a little bit closer this weekend too. And this really is a lot of uncertainty in the markets. When you start to see the VIX really start to move like this, there's some uncertainty in the markets. Which way it will resolve itself is anybody's guess at this point. So we just watch and wait. But as this thing, and if this thing gets back up and over 23, you can bet the markets are going to start to dive a little bit more. Just I just can't believe that the VIX would go up to 24, 25 and the markets wouldn't be making new lows. It's going to be seen. You're going to see more of. Now, which side wins? We don't know. But this is a lot of uncertainty. Within 1, 2, 3, 4 days, we saw up, down, up. It's just like they can't quite make up their minds, and these are major moves. So the VIX really showing us a lot of uncertainty in the markets right here. We'll be watching closely where it closes at the end of the week too, and if it drops down, will it hold this lower supportish area? Regardless, doesn't matter. It starts to drop back down. Obviously, nobody's quite ready to panic yet, but any pushes up above about the 25 level, that could mean some heavier selling in the markets.